If Q3 results disappointed you, has Q4 results brought any good news for investors? The Q4 FY25 result season has come to an end. Until Q3, there had been quite a few concerns in terms of business performance. The sales growth had hit a 5-quarter low. Profits had expanded, but not due to operating performance. Among market caps, small caps had done particularly bad. Mid caps business performance was subdued too. Now we discussed this in our Q3 results update video. Now that the Q4 results are out, the question that needs to be asked is, has Q4 brought good news for investors or does the pain still persist? By the end of this video, you will get the answer to this question. Hello and welcome to ET Money's YouTube channel. In today's video, we will pour over the Q4 and FY25 results of listed companies and find out how companies have performed. We will check the aggregate picture and we'll also take a look at the sectors and stocks that stand out. So this video will help you realign your portfolio as per the latest market trends. Now if you're looking to add stocks, it will help you spot the bright pockets in the market today and avoid the dark ones. This video belongs to our results update playlist. You can explore it in our quarterly results analysis. Now as usual, the link is in the description. Okay, let's begin with answering the first crucial question. The quarterly year-on-year revenue growth of BSE 500 group of companies hit a low of 4.4% in quarter 3. It was the lowest in the last 5 quarters. Let's check if Q4 has brought some good news on the revenue front. And good news there is. The revenue growth has jumped 7% year-on-year in Q4. That's still lower than that in Q2, but significantly higher than in Q3. Let's also take a look at the full FY picture. The revenue growth in FY25 is a tad higher than that in FY24, and that's a welcome sign too. Of course, these numbers are much lower than FY22 and FY23, but do remember that ultra high growth in those years was due to a recovery from COVID-19 shock and the release of pent-up demand. Overall, the revenue growth of BSE 500 set of companies does give a reason to smile. But picture abhi baki hai mere dost. Let's move to the next question now. First, let's take a look at the quarterly profit scenario. Profits grew by 10.4% year-on-year in Q4. That's much lower than 17.9% registered in the previous quarter. But as we noted in our Q3 results update video, the higher profit growth in Q3 was not backed by higher operating margins. That meant that the reasons for higher profits was not better business performance, but a fall in interest outgo, depreciation and taxes. So, what needs to be checked is whether operating performance of companies has improved in quarter 4. The average operating margin has improved by 0.7 percentage points in Q4. That suggests that better operating performance does have a role to play in the higher profits in Q4. So, in spite of the fact that profit growth has come down compared to the growth in Q3, it's not a problem as operating performance has improved. Now, in terms of yearly performance, the profit growth in FY25 is the least over the last 5 years. It's just a fourth of that in the previous year. Overall, Q4 does show some promising green shoots, but on an annual basis, FY25 has failed to impress. Okay, let's move to the next question now. Let's start with small caps. In Q3, small caps had registered a massive contraction of 620 basis points in their operating margin on average. Their revenue growth had also fallen by 8.3%. Take a look at the updated picture now. As far as the revenue growth is concerned, it has jumped back to 8.3% year-on-year in Q4, thus reversing its contraction in the previous quarter. However, the profit growth has fallen from 11.4% to 8.4%. Now that shouldn't be a problem as the growth in the previous quarter wasn't driven by operating performance. So, has the operating performance improved in Q4? Sure, it has. The average operating margin has expanded by a healthy 221 basis points or 2.2 percentage points year-on-year. This reverses the trend of margin contraction in the previous 2 quarters. The improvement in revenue growth and operating margins is good news for small caps. But the situation isn't good for mid caps. Both their revenue and profit growth has fallen in Q4 as compared to the growth in Q3. The margins were intact in Q3, but in Q4 they had fallen by 79 basis points. Now, a fall in margins but a rise in profits suggests that companies have benefited not from better operating margins but from less taxation, depreciation, or interest outgo. Now, what about large caps? Well, their revenue growth improved but profit growth dropped as compared to the previous quarter. The drop in operating margin likely has a role to play in this. Large caps were a bright spot across market caps in Q3, but in Q4 they have disappointed. Overall, as far as market caps are concerned, small caps have registered a recovery while mid caps and large caps have posted a tepid show. Now that's counterintuitive because recovery should ideally come in large and mid caps first and then small caps. So what explains this? Well, one of the possible reasons for this discrepancy is the comparatively worse showing by small caps in the quarters gone by. Q4 seems to have provided them with much needed respite. However, the lack of sync among the market caps signals that recovery is rather patchy and not broad-based. And that's not a good thing. Okay, up to this point, we have discussed results from a perspective of the entire market. Now, we will move to sectors and stocks and take a more focused look at Q4 and FY25 results. But before I proceed, do subscribe to the channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. As of quarter 3, the sectors that had been doing well were capital goods, consumer durables, healthcare, realty, and telecom. The capital goods sector was the star of the pack. The oil and gas and power sectors had been doing badly. Now that the Q4 results are out and we have the full FY data too, has the picture changed? Well, consumer durables and healthcare sectors have continued their good performance. They have done well throughout FY25 with healthy revenue and profit growth and expansion in operating margins. However, the performance of other three sectors seems to have lost its spark in quarter 4. The capital goods sector has slid into single-digit growth from double-digit numbers. Its operating margins have also declined in Q4. Ditto for the realty sector. The telecom sector has continued to do well. However, the average margins has fallen in quarter 4 year on year. However, one thing that you must note in the telecom sector is that its numbers are dominated by just one company, Bharti Airtel. Airtel alone contributed 65% of the sector revenue and 82% of the sector profits in quarter 4. Airtel margins expanded by 508 basis points year on year from 52.4% to 57.4%. Now, has any other sector emerged as an FY25 winner post Q4 results? Yes, metal is one such sector. However, do note that the sector's revenue growth has remained in single digits. The margins have expanded, but given the gross mismatch between sales and profit growth numbers, it is likely that non-operating performance is the real cause behind the sector's stellar profit numbers in Q4. Now, what about the losers of Q3? Oil and gas and power. Both of them have yet to recover. The oil and gas sector has posted low single-digit revenue and profit growth. The average margin has continued its declining trend. The power sector has seen both its profits and margins fall in Q4. Now, are there any new entrants to the list of poor performing sectors? Of course there is. It's auto. The sector's profits have fallen by 27% year on year amid a margin contraction of 62 basis points, which is the third consecutive decline in the year. Lastly, let's see companies that have done well in Q4 and throughout FY25. While taking a bird's eye view of market and sectors is useful, it has an obvious limitation. It hides the individual performance picture. Now, there can be good companies in weak sectors or market caps and vice versa. That's why it's crucial to also take a bottom-up view and look at individual performances. So, let's now see the winning individual companies of Q4 and FY25. In our Q3 results analysis, we found that 54 companies had excelled in each of the last 4 quarters. That means their revenue and profit growth improved and the operating margin expanded. Now, when we applied the criteria of 10% growth in revenue and profit for each of the quarters, only 25 names remained. Let's first check which companies cleared these criteria post Q4. Then, we will see how many of these are same as that in Q3. Of the BSE 500 group of stocks, as of Q4, there are 44 companies in all whose revenue and profit growth are positive and the margins have expanded in each of the last 4 quarters on a year-on-year basis. Now, how many are there if we apply the revenue and profit growth criteria of 10% year-on-year in each of the last 4 quarters? There are only 16 names now as against the 25 last time. The list is on your screen. Now you can pause the video to read the names or take a screenshot for a later reference. The common names in the list vis-a-vis the Q3 list are highlighted in the table. There are 10 such companies. As usual, please don't consider this list as an automatic recommendation. The idea is to highlight the individual winners of Q4 and FY25. You can use this list as a starting point of your research and do your due diligence. Now, if you want financial data of these companies, you can head over to the ET Money website or app. Here, you can type the company name in the search bar and access a host of information on it, including the balance sheet, income statement, cash flow statement, and financial ratios. What's more, you can also find details on the shareholding, peer comparison, technical indicators, and corporate actions. Now, like last time, let's also check if there are any companies that have performed poorly. That is, their revenue and profit growth numbers are negative and the margins have declined in each of the last 4 quarters. The glaring name in this list is Asian Paints, a supposedly high quality stock and the leader of the paints industry. However, due to the rise of competition in the paint sector, the company has reported degrowth in each of the last 4 quarters of FY25. LMW is a common name with respect to the Q3 list. So, these were the main takeaways from the Q4 results. To summarize, while there are signs of recovery in business performance, the recovery appears to be quite patchy than broad-based. Amid this scenario, focusing on specific stocks and sectors that have been doing well is the key. Now, we have discussed them in this video, but do your own research before investing in any of them. And with this, I have come to the end of this video. I hope you found this video useful. And if you did, do share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.